It is time now for a segment brought to you by Massey & Associates. The stock market has been plunging. So what do investors do? Well, here to share some ideas to take advantage of the low market is certified financial planner Jeffrey Massey. Welcome back.
Well, thank you. It's always a pleasure to be here.
Happy to have you with us. Really volatile stock market this year. You've been on in the past saying when it comes to investments, don't do anything drastic. Make sure, don't do anything crazy. I know the world is kind of going nuts in many different ways. So a lot of people are wondering what to do with their money. So what advice, maybe something positive that folks can do or can take advantage of given the market right now?
Well, most importantly, don't make emotional decisions.
Okay.
Now, your money that's in the market should not be money you need in the near term. It should never be that way. It should be your long-term money. Historically, the market recovers. We never know exactly when that's going to be. My crystal ball's been a little cloudy, so it's in the closet. You know what I mean? We can't tell what's going to happen. But historically, it will come back. So don't get crazy about your decisions.
Okay.
If you're that concerned, don't open your statements. If it's long-term money, just ignore it.
Okay.
Sometimes ignorance is bliss when it comes to the market.
Maybe let it work itself out.
Exactly. Let it recover. But there are some advantages when the market's low like this. That's kind of like the silver lining.
What are those advantages?
Think about Roth IRA conversions. So you have money in a traditional IRA, and let's say your value is down 10 or 20% even. Well, now's a good time to convert to a Roth IRA because you'll pay tax on that much less money.
Perfect.
And then if it just recovers, that growth in the future then becomes tax-free if you play by the rules. Two simple rules, 59.5, 5 years in the Roth.
Okay.
So for many people, that's easy to get to.
So
it's a big advantage to take advantage right now of these lower stock values.
Certainly, that's some great advice there. What if you have investments in like non-IRA accounts?
It's an interesting thing there. You can sell your stock at a lower value now if it's important for you to increase your cost basis. So in other words, pay taxes a portion at a time, if you will. And that allows you to then reset your cost basis. There are some advantages long term to do that. And there are folks, if you're in the lower two tax brackets, your capital gains tax is 0.
Really?
So always don't just do this on your own. Please meet with a CPA or a certified financial planner professional to make sure that you're doing the right thing. But these are just some generic ideas that many people could take advantage of.
And you have some points that you want to make mention of. Excuse me. If you're going to gift to college-age kids, what do we need to know there?
It's a great concept. We helped a client recently with that. He had stock options from work, so 0 cost basis, all taxable if he sold it.
Okay.
He would pay 15% plus a 3.8% surcharge because of his tax bracket. We suggested gifting the shares of stock to his college-age son, who was 19. He could sell those stocks and pay 0 capital gains tax.
Wow.
It's a huge advantage for people.
That really
so
is.
we really like when that happens. And his first reaction was, "Is that legal?"
Right,
and I'm like, "Yes, it is, absolutely." Knowing the tax code is a big part of what we do. We focus a lot on tax planning.
And that's, I mean, you can help us take advantage of something
absolutely.
like that. That's a great tip that we might not know. Next up, selling stocks at lower values. That's a good point there as well.
Yeah, and that ties in with if you have non-IRA accounts, this is where that comes into play because you're selling those stocks at a lower value. If you like the stock, you can sell it. Again, change your cost basis, improve your cost basis. You can always buy it back the next day. There's no prohibition of doing that. It's only if you're losing money is there a 30-day restriction to buy that same stock or something substantially similar to that.
And before we let you go, gift stocks at a lower value as well.
So there is an annual gift exclusion of $16,000 where you do not have to file any type of tax form. Well, if you have a lower value right now, you can give away more shares, which when they recover will be greater than that $16,000. But that is not a limit. A lot of people are concerned with that. You can give away today up to $12 million if you have it and pay 0 tax.
Well, if anyone has $12 million that they're looking to give away,
just let us know.
Yes, just let us know. We'll take it. Jeff, thank you so much. For more advice from Jeffrey, just head on over to roadshow.com.